Hello and welcome to the 2018-2019 Employee Benefits presentation for Pharmacare. During the next 15 to 20 minutes, we're going to walk through at a fairly high level and brisk pace the employee benefit offering at Pharmacare services. We'll start on page 2 with a listing of what is available to you as an employee: medical, dental, vision, life insurance, disability insurance, and 2 different kinds of pre-tax spending accounts. One is called a flexible spending account that goes with one of the medical plans, and another one is called a health savings account that goes with the other medical plan. Couple rules of engagement during the year. In general, what you pick sticks for about a year. So think of it like that. The elections that you make during this open enrollment do not change unless you have one of these IRS-approved excuses in the middle of the year. Marriage, divorce, birth of a baby, things like that are reasons why you can change your election in the middle of the year. But in general, what you pick sticks for a year. Here's some examples that will let you go over on your own. If anybody is like me, and HR at Pharmacare really gets the credit for putting this together, these are some examples of different qualifying life events. So I really like these because I learn by example as well. So we'll let you go over page 2 on your own. We'll be spending most of our time today on page 3. The insurance carrier is Blue Cross Blue Shield of Texas. Here's the policy number. The network is the Blue Choice PPO. Plan year starts on October 3rd. Excuse me, it does not start on October 3rd. It starts on October 1st and ends September 30th. But always remember, your deductible and your out-of-pocket maximum always go from January to December. So we have a plan year that is administratively in the middle of the year, towards the end, but our calendar year deductibles always run January through December. All plans meet ACA requirements, and their website is right here. Now, we're going to talk about these 2 medical plans you see here. The one on the left will have a lower cost of insurance for employee, employee spouse, children, and family. The one on the right is a buy-up plan. The reason it's called a buy-up is because you're going to buy up to it if you want to afford for more protection. Now, here's how these plans work. Let's start with the one on the right-hand side. This is a PPO option, and I could call this one a copay plan. The reason I call this a copay plan is you have these copays when you go see a doctor. You've got a copay for retail clinics, virtual visits. Here's your deductible. I'll explain that in just a second. And then you've got copays for prescription drugs. So at point of care, whether it's the doctor or the pharmacy, you're paying a copay. You're not paying the actual cost of the doctor visit, and you're not paying the actual cost of the pharmaceutical. You guys are going to know way more about that than we ever would, but you're going to be paying a copay. Now for that, that's basically the biggest difference in this plan. For that, you're going to pay a little more in terms of the cost of insurance. What you'll notice is a $5,000 deductible and then a $5,600 out-of-pocket maximum on an individual basis. Now, by contrast, what you'll see on this plan on the left-hand side, this is a high-deductible health plan that has an HSA or health savings account attached to it. Now, what you'll see is you don't have copays anywhere on this plan, and that's one of the reasons why the price tag for it is a little lower. You have a higher deductible and a higher out-of-pocket maximum, but I will have to say, from a worst-case scenario perspective, out-of-pocket maximum on an individual basis, you're looking pretty close. You're only a difference of about $400 on the out-of-pocket maximum or worst-case scenario. So it's really a function of how you use your benefits underneath this deductible. Virtual visits are covered under a copay no matter what way you go. That's 24/7, 365. Access to a doctor right over the phone. I have 3 kiddos. I just used this the other day because my 3rd kid, it was pretty clear to us. We do watch a lot of doctor shows on television, so we're pretty good at IDing this kind of stuff. We thought it was double pink eye because both of my eyes on my 15-month-old daughter were pink. So we called the doctor, and it took us maybe 20 minutes to get the doctor to write a prescription, do a workup over the phone, and send it to our closest pharmacy. It was pretty easy. So this is a good way to actually use your benefit if it's something like a seasonal allergy, aches and sprains, especially if you've got kiddos and you want a second opinion. So you've got a copay on either plan, no matter which way you go. But on this HSA plan, you don't have copays when you go to the doctor, and you don't have copays when you go to get a prescription. You're paying the discounted cost of that. And for that, you get to set aside pre-tax money into an account that has your name on it. So if you are on the high deductible health plan, this plan on the left-hand side that I'm showing right here, because really you don't have any copays, you're paying, again, the discounted cost when you go to the doctor, or the discounted cost when you go to the pharmacy, you can set aside extra money out of your paycheck in addition to the funds that Pharmacare puts in on your behalf. They put in $600 a year, which is pretty generous. We have about 300 clients that we work with here at Catto&Catto. We're brokers and insurance nerds and consultants, and so we help companies like Pharmacare find, price, and explain insurance. That's essentially what we do. We don't work for the insurance company. We work on the organization's behalf to make sure that you end up as an employee of Pharmacare with the best possible plan at the best possible price. And so I say that to say we have a lot of companies who offer HSA plans as a part of their portfolio. Not very many contribute to it because it's just a direct bottom line expense to the company. So this is very generous that Pharmacare inserts money into your FSA that's in your name, and you can insert additional money into that via payroll deduction if you so choose. Now, this money doesn't go anywhere unless you spend it. It's for medical, dental, or vision related, and it's basically a tax play. Money's not tax going in, it's not tax coming out. So it's a very tax effective vehicle. If I were a CPA, I would be jumping up and down right now, screaming about how cool this vehicle is to drive, because from a tax perspective, it's pretty awesome. Now, you don't get this option if you're on the buy-up option. Remember, the buy-up option has copays on it. It is not a high deductible health plan. And one of the reasons why that is because you've got these copays right here for doctor visits, these copays for drugs when you need them. So somebody who is looking to insure against catastrophic risk and doesn't use their benefits very frequently might be attracted to the tax vehicle of an HSA tied to the base plan, which is that HSA plan. Someone who is on a regular interval of seeing doctors and has some higher prescription medication expenses might be more attracted to paying more for the cost of insurance for the right to pay a copay when you actually use it. So that's really the decision to make. Section 125 cafeteria plan. These are benefits that come, another benefit that comes pre-tax. So we just talked about an HSA. Now, if you're on an FSA, that's on the buy-up plan. The HSA gets tied to the base plan. The FSA gets tied to the buy-up plan. If you're on the buy-up plan, you can set aside up to $2,650 via payroll deduction and have access to that entire amount on day one. So it's kind of like reverse layaway. When I was growing up, we'd go to Walmart and look at the bike, but we couldn't afford to pay for it. So mom would put the bike on layaway, and then we'd get the bike at Christmas. We'd pay for it first, then we get the bike. An FSA is you get 100% of your contribution. So let's say you put in $2,000 into your account, you get the entirety of that $2,000, but you hadn't paid for it yet. You get the bike first, and then you pay for it via payroll deduction afterwards. And so the biggest catch with an FSA is this provision, use it or lose it. If you elect $2,000 as an example into your FSA and you do not use those funds, then you lose them. That's an IRS ruling. That's part of the Section 125 cafeteria plan, and that's a requirement of every FSA out there. So just remember, these are for planned expenses. So if you know you've got a surgery coming up, and maybe you've got some LASIK surgery coming up, something like that, and you're on the copay plan or the buy-up plan, then an FSA can be a good vehicle to drive to squirrel away a little more pre-tax money because you know those expenses are coming down the pipe. Just remember, you gotta use it. This slide is where to go when, and many of you are gonna know this as much or more so than we would. From left to right is cost. So you've got the doctor's office, retail health clinic, urgent care providers, freestanding ER, and then of course the hospital emergency room. One thing that I will make a note of, be aware when you walk into a freestanding emergency room. This is a very profitable business for hospitals. It looks like an urgent care provider, but if it says see a doctor in 1 minute, or if it says literally the words emergency room, you're walking into a freestanding ER. I had a friend who was pregnant at the time. And so anytime there is a concern when you're pregnant, you want to take that very seriously. So she went to the ER, and turns out she was just dehydrated, and they gave her saline and a $5,000 bill. I told her that I would have done it for half just because we were friends. And so she didn't really think that was funny because the situation wasn't really funny. But I just want to highlight, make sure you know where you're going. Let's talk about your teeth. Here's the way a dental plan works. Here's the rates that come out of your paycheck. Down here, see what page are we on page 7. Here's how it works. Say you go in for your preventative services. It says 0% deductible waive. 2 teeth cleanings a year, one every 6 months. So let's say you're like me, you go in once every 6 months and you get your teeth cleaned. And then one time they tell you you've got a cavity. That is covered under a basic service on this dental program. Let's say the cost of the cavity is $200. So the preventative service itself was $0. That's where that 0% comes in. But the cost of the cavity, let's say, is $200. Here's how the math works. $200 price tag, you first pay your deductible. Always got to pay your deductible on insurance. 200 minus 50 is $150. Covered as a basic service is 20% after the deductible. That's what you pay. So you're paying 20% of 150, or you're paying $30. The insurance company is paying 80% of that 150, or $120. And that $120 posts against this $2,000 annual maximum. So think about that $2,000 annual max as like a bucket of money that they throw towards covered services. Now, if any of you are like me, and when you walk home, you're looking at children who smile at you and you're going, oh my gosh, they need braces. $2,000 ain't gonna cover braces. So put it in the category of something's better than nothing. That's actually a little richer benefit than we normally see on plans like this. And so use it if you can, but it's not gonna get you all the way there. That would be a good reason to set aside money into an FSA, pre-tax money, if you knew you were gonna have that expense, or if you were on the base plan, into your HSA, your health savings account. Let's talk about your eyes. First of all, if this is blurry, you should probably consult an eye doctor. And when you go into the eye doctor, here's going to be the thing that's most confusing to you. See this benefit frequency? Once every. That means you can't get glasses and contacts in the same year. So 2 things happened to me in 5th grade. Number 1, my basketball career peaked. Number 2, my vision got worse. So I've been living this dream since I've been in 5th grade. I've been payroll deducting something close to these numbers out of my paycheck for the right to go see an eye doctor once every 12 months. And that eye doctor is either going to give me $130 for some cool guy frames, some copays for lenses, or I would choose $130 for contacts, but I can't do both at the same time. I will say these $10 copays, that would work for somebody like my wife who has relatively good vision and she doesn't have to shrink down the lenses just to fit on her face. Luckily, I have a bigger nose than my wife does, and I need real thick glasses because I have to get an astronaut to work on them to shrink the lenses down. I'm not getting out for a $10 copay. That's my choice because I want for my Christmas card to look really cool and not Coke bottle tops on my face. Call it vanity, but that's just the way that I choose to make that decision. So just know that you might not get out for $10 depending on how good or poor your eyesight is. Accidental death and dismemberment, your basic life policy. First of all, the plan is paid for 100% by Pharmacare. That's super cool, free to you. Make sure you update your beneficiary. Beneficiary is who catches the football if, God forbid, you're not holding it anymore. Here's who it can't be. This is Handsome Zeus and his sister. These are the owner's dogs. They're good dogs. The problem is they can't be a beneficiary on the basic life form. It's got to be a human being. It can be anybody you want. You can change it, but I wouldn't necessarily change it. If you get in a fight with your beneficiary, that might lead to other problems, but it's got to be a human being. No dogs, no canines. Basic life amount is 1 times your actual salary between 10 and 50,000. So depending on what your salary is, that's what you get in terms of the basic life coverage. Now, a lot of information on page 10, voluntary life. Here's what voluntary life means. If you want more life insurance than the free stuff that your employer just bought for you, then you can choose to apply for it. If you are a new hire and this is your first time to say yes or no to voluntary life, then you've got a higher amount of guarantee issue. Guarantee issue simply means no medical questions asked. In other words, if I'm a new hire at Pharmacare, I can apply for $150,000 with no medical questions asked. I take my age, which corresponds to a rate per thousand. I divide it by 1,000, and then I get my biweekly deduction. Age, rate per thousand, and you take how much you want. So if you wanted 200 grand, for example, and you were 28 years old, you take 200 times 0.037 divided by 1,000, and that's how much is there. Now, if you chose 200,000 and you were a new employee, you'd be 50,000 over the guarantee issue amount, which means you'd have to have some medical questions asked. If you chose 200,000 and this wasn't your first time hearing this drill, then you'd have to have some medical questions asked. Not a huge deal. I just don't want you to think it's automatic. It's only automatic for a new hire who's saying yes to 150,000 or below. And then you've got some amounts that you can choose for your spouse or children. Okay, disability insurance. Conceptually, I want you to think about anything disability insurance related as insurance on your paycheck. The reason I say that is because if you're anything like me, your ability to work and earn an income is pretty important to your family. If you could not go to work or earn income, then your family would likely have a big gap to fill. Disability insurance replaces income on your paycheck, up to 60% of it. So just the other day, I was sitting at dinner with my bride, and God forbid we should ever actually have to use this, but we were 3 tables down from some friends of ours, and the husband had had a stroke, and he could not go back to work. And I said, gosh, I really hope they had disability insurance. And then guess what my wife said? Do we have disability insurance? And I said, yes, we do. Up to 60% of my pre-disability earnings are protected via an insurance policy up to Social Security normal retirement age. If, God forbid, I'm ever catastrophically disabled and can't come back to work. That's what long-term disability is. Kicks in after 91 days, 60% of pre-disability earnings, up to $5,000 a month, to Social Security normal retirement age, if you're catastrophically disabled and can't go back to work. If you can go back to work, then there's some offsetting, meaning if you could go do your job and not somebody else's, then you'll work with the insurance company. You wouldn't receive the full benefit because you want to go back to work, is the hope, not to be out. And so there are 2 products. We've just gone over an example of long-term disability. Short-term disability kicks in after the 15th day of injury or illness. Yes, pregnancy is a qualified example that triggers short-term disability. So when my wife was pregnant with our second kid, I said, congrats on getting disabled. She didn't think that was really funny either. Had I had planned the second pregnancy, had my wife and I planned it, then I would have bought STD. But we didn't, and it was a surprise. And now I've got a 5-year-old that gets on the bus at 6:57 in the morning. Thank you, Jesus. And I am thankful for that. Maybe not the 6:57 a.m. bus drop off, but all the other things. So if you have 60% of your pre-disability earnings and short-term disability up to $1,500 a week for 11 weeks, here's the pregnancy benefit. This is what's paid by you. The long-term disability is paid by your employer. So total sleep at night factor. So if you want to insure against getting disabled for between 15 days and 11 weeks, then you take weekly salary times the STD rate, which you get from here and here, and then you'll get to the cost per paycheck. That way you can see whether you want to float it or not. Last couple of items, and then we'll be done. EAP, Employee Assistance Program, pretty good for financial, legal, marriage, or family problems. Up to 3 face-to-face visits a year. You just got to remember that you have it. It's 100% paid for by your employer. It is confidential. They do not get a Twitter post that says so-and-so called for stress-related items. That does not happen. And so it's completely confidential, and it is free to you. You just got to remember that you have it up to 3 visits per year. Travel assist is best for lost baggage and passports. Got to remember the numbers. If you're traveling more than 100 miles away from home, lose your passport or bags, you got a little bit of help through actually your insurance company, which is kind of squirrely. You wouldn't anticipate this being in there, but it is. Premium only plan means that you can take these deductions that you choose out before tax hits. So that's a good thing. We want to have a premium only plan. That way you're not paying tax on these benefits. The rest of the material in here is great late night reading material and required notices. The only other thing that I'll mention is this is a good Q&A. It's on page 20. Got ID cards, initial enrollments, things of that nature. Lots of good Q&A. On page 21 is who to call. So Linda in our office or Aranya at Pharmacare are 2 of the primary points of contact. And then here's the carrier and vendor lineup for the next year, along with websites and phone numbers. Now what to do next? Go here. Pharmacare.employeenavigator.com. This is going to be an Amazon-like experience. You'll go to this website, drop in a temporary username and password, get an email, confirm a permanent username and password, and then you'll go through and elect your benefits. I want medical and not dental, or dental and not medical, so on and so forth. And it will populate a shopping cart, so to speak, and you'll be able to see exactly what's coming out of your check. More information will be in the guide that you have on page 23, and then you've got a glossary of terms on page 24. And just in case you wanted to stay up and take some notes, that's what's filling out page 25. We thank you so much for coming on board with Pharmacare Services. Look forward to serving you in the future. Thanks very much.